Dollar weakness has been a theme to start the week and is looking to gain some traction into Tuesday. Interestingly enough, a lot of this move has been attributed to the US-China trade truce, which we find interesting because it's a truce that could arguably be the thing that strengthens the dollar and that it diminishes the possibility of the U.S. moving forward with a soft dollar policy. Nevertheless, it seems as though the market had been trying to buy dollars on a flight to safety in the lead up to the truce and is now liquidating that position on hopes this will reduce downside risk to the global economy. But we've also been seeing a more understandable exit from dollar longs in recent days, with the Fed taking on a less hawkish stance, indicating rates may be a lot closer to neutral than previously signaled, with many now talking about the possibility of a pause in the normalization process. This would be something that would force yield differentials out of the dollar's favor and would be easier to reconcile from a price action standpoint. As far as global politics beyond US-China trade goes, things have been looking up in Italy, while in the UK the 5-day Brexit debate kicks off, a 5-day event that leads into the anticipated vote in Parliament next week. Theresa May has a tough battle on her hands, and the pound is clearly worried about this, standing out as a clear underperformer, the only currency amongst the developed currencies to be trading lower against the US dollar over the past week. The pound couldn't even get help on Monday from the better-than-expected UK manufacturing PMI read. The U.S.-China trade truce hasn't been as kind to the U.S. equity markets and global equity markets for that matter, with yield curve inversion fears sending off a less optimistic signal to investors. Looking ahead, standouts on the calendar include that start to the Brexit debates, BOE Carney testimony, UK construction PMIs, Eurozone producer prices, and the New Zealand GDT auction results. Earlier today, we got some offsetting data out of Australia and an RBA decision that produced an as-expected hold result, perhaps slightly supportive of Aussie as the cautious but balanced outlook removed risk of an unexpected dovish tilt. That's all for now.